Hello friends, welcome to Nirmal. I'm Piyush Jain, and today we are bringing to you a corporate discussion, and this discussion is about introduction of a new debt instrument by a very renowned financial company. We're talking about Cholamandalam Investment and Finance Company Limited. The company basically is introducing a non-convertible debenture. Let me give you some details about the debenture. And before I introduce the management, let me actually share some details here. There is the NCD, which is going to get listed on PAC and NSC both. The issue is going to open on April 25 and is going to close on May 9. Issue size is about 1,000 crores, price at 1,000 with a face value of 1,000 rupees. We'll have more numbers, but let's try and understand what this implies, what the company is going to do with the money, and what kind of opportunities actually you can see in that. And for discussing all of that, let me now welcome the Chief Financial Officer and President of Cholamandalam Investment and Finance Company Limited, Mr. Arun Selvin. Arun sir, welcome to the show.
Thank you very much. Uh, thanks for hosting us, and this is an important event, and we look forward to you are covering this particular issue. It's a good thing. Thank you very much. Please go ahead.
Absolutely, sir. So I think it's I would say that times have changed. Some years back, I think everybody would be only looking at equity returns, or basically would be looking at fixed deposits. Because for retail shareholders, our viewers, the corporate debt market was largely very far away. But times have changed. Things have become more accessible, more easier to view, more easier to invest. And this is something which is very good for the retail shareholders also. And let's understand, as per the numbers are telling us, the yield is actually between 8.25% and 8.4%, which is something I think which is very good for the retail shareholders also and other asset class. But I'll first start with a very basic question. Why this fundraising is happening, and why basically you've chosen this time? And my question has an obvious backdrop that perhaps the yields are already at a higher end. So why this time, and why you're raising funds?
So it's like we are growing at a very steady pace, as you would have seen our asset side of the book. We have crossed the 1 lakh crore number, and as we keep growing and we see good potential to grow in the coming years, we want to also widen the liability side of our borrowings. From keeping it very basic to the extent of only banks and the private placement of NCDs and CPs to other forms of borrowing from other segments of investors. So this is more like a start of an experiment to plan and build a investor profile which could be used to us over the beyond the next 3 years and beyond. That's the plan we are trying to do from starting from now. So that's why we are starting it in a very small format of 1,000 crores. Our appetite to borrow is very large, but we want to try this in a small format initially, see the response in the market, and then as we find it good, we will scale it up. Regarding the rate cycle, we really don't try to time the market from a rate perspective. This is more like we want to see is there appetite, and in a way it is good because at least there is a large amount of consensus that we are at the sort of peak of the rate cycle. Maybe so this rate we can test it, and then as we move on, we can look at what the rates prevail in the market and do it. We have tried to price it better than the FD rates prevailing in the market, and competitively. Uh, Factoring in the rating we are having, which is a AA plus from both IFRA and India rating, and our standards in the market with regard to investors.
Well, the stock, the company stock actually has been one of the best performing NBFC stocks over the last 3 years. I think everybody knows what a stellar increase in the business, stellar increase in the multiples. Again, what a sort of stock performance. But that's for our viewers again. But coming back, funds are like a raw material for any bank or NBFC. So the sort of real I would say the recipe here is that are your interest margins almost fixed? Like if you're borrowing at 8.25, 8.4? Is it something like 2.5, 3 or 3.5%? You will sort of price it ahead, and then that's the NIM you will be maintaining. Is that something sort of a good assumption?
No, we have a wide range of products where the yields range all the way from 10% to 20%. So the names for different products are different. But then so is the case of what happens beyond the NIM, which is their OPEX and NCL. So that's where, since we have a very wide range of product, and these product range volumes keep shifting depending on market dynamics, we really don't try to hold at a very broad company level at a NIM level. Rather, we look at the ROTA level, which is the return on total assets. So we keep targeting, and I would say we fairly have been also achieving a 3.5% plus ROTA consistently on a pre-tax basis, which is where, if you do a post-tax calculation and look at a fairly decent debt equity ratio, you will be able to give a return on equity of around 18 to 20% type, which in my opinion is what the investors would expect from when they are investing in a company like Chola. So that's this is the broad sort of the approach we make to make sure that we get the ROTA. So these funds will be used in multiple products, but then overall it is as good as maybe slightly higher than what I am currently borrowing from banks. But as I said, it is more an experiment to see, and as we move forward, we will see whether it's sort of finally stabilize in this segment.
Fair enough. Coming back to the numbers on the issue here, the base issue size is around 500 CR, and there is a green shoe option which is 500 CR. Um, what's the plan there? Are you expecting to really exercise the green shoe option also?
Yes, if the demand is fully subscribed to the 1,000 plus, we will certainly do it, because we don't want to disappoint investors if they made a genuine effort to come and participate in this issue. We will certainly go up the full hog if there is appetite.
Right. And also help us understand that there is a spread on the tenor here. 22 months has been priced at 8.25%. There is also a 37-month tenor, and we also have a 5-year tenor here. So help us understand the sort of rationale behind it, and for our viewers, how they should be looking at it. And one of the questions, perhaps as a naive question, but from our viewers per se, is it something there is a lock-in which is applied, like how it works? Please, for our viewers.
No, we have not complicated with any differential rates, lock-ins, etc. We have made it a pure plain vanilla. Again, I keep harping on it, like this is pure an experimentation stage. So we don't want to bring too many complications in it, and it's a fairly small issue compared to the appetite we have. So we want to just test the market on where we are, and how this is happening. So if we find it comfortable, and we find that bringing differentiations in the pricing beyond the tenor based pricing is fairly I would say normal parlance. So beyond that, if we will need to make some further nuances, differentiating retail versus corporate, or lock-ins, put and call options, these things we are not wanting to try at the first stage. But if there is requirements from the investor end to make a differentiation on such fronts, we will certainly look at it in the subsequent issues.
Absolutely, sir. The issue is closing on May 9. When do you expect it to get listed? Any any sort of target date?
No, we would keep it to the bare minimum as per the regulations. We would not want to sort of go beyond what is. And I think again, AK Capital team, which is the lead managers, they are fairly experienced, and they are one of the I think they are in the top of the league table, so they should help us get everything done at the earliest. There should not be any issues.
Right, sir. And so far, how basically are you looking any sort of road shows? How's the demand looking to you? I was asking you this question because there is a 20% allocation to institutions. Any sort of pre-bid interest which is already coming in the during the road shows?
No, we are yet to do the roadshows. This is the first day we are doing it, and we will do some. But I think now it is more the online format is well accepted and convenient for everybody also, both from our end as well as from the participants end. So we would certainly do more on the online front, but we will also try and do if need be. There is of course always more than happy to do in physical format also.
I'm extremely sure, sir. With the pedigree of your group, this issue is going to sail extremely smoothly. But since I have the opportunity of talking to you, I don't want to miss this opportunity. So I'll ask you one question on the
Sure.
March quarter and the exit April trends. We have been tracking fortnightly credit growth trends, and those have been robust, consistent, robust, hardly 1.5% credit growth difference, but largely very strong. What has been your observation overall in the financing trend, and especially when almost every 2 months we were seeing a rising interest rate, but has there been a sort of any major swing in terms of credit growth?
No, credit growth is very robust, and we see demand perking up. I mean, if you look at it, even from the most of the manufacturing companies are also looking at now credit. There's a good amount of appetite coming up. So I think we are fairly on the upswing trend across broad segments which really matter for the country as well as for all of us from an economic perspective. As long as there's no new pandemic or new COVID, again we see some small upswing happening here and there. As long as those things don't deter us, I think we are fairly on a good path of recovery, and we should see good growth coming in the years. But it's a little too early to sort of predict anything on that right now.
Right, sir. I think thank you for giving this opportunity. It looks like a novel experiment from your side, but the market has great appetite. We have been seeing a phenomenal response to the bond issues, bond market. It has been a great revelation again for the market participants. There's tremendous liquidity out there. So we wish you all the best, but we are extremely sure that with the pedigree of your group, this issue is actually going to see a great response.
Thank you very much. Thank you very much. Thanks for your confidence and thanks for your interest in us. Thank you very much. Thank you.
And dear viewers, with that, we come to the end of sort of this conversation. This is the issue which is coming from Cholamandalam Group. It's a NCD issue. And the issue actually is, once again, I'm saying it is going to open on April 25, is going to close on May 9. The issue is going to give you yield range of 8.25% to 8.4%, and almost 30% is being allocated for retail shareholders. There's 30% for HNIs, 20% for non-institutions, 20% for institutions. Looks like an interesting offering. Hope you enjoyed it. And with that, thanks. It's a wrap on the show.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.